Hey traders, Raghee here. Welcome to our Friday, January 29 episode of Charts and Coffee. Should be good to go on the audio and video. All right. Great to see everybody. Hope everyone has been having, this has definitely been an interesting week. So as always, whatever questions you might have, feel free to type them in. And we're going to kick off with a quick look. I know I have GameStop up here. That's not even the interesting part of it. All right, let's go take a look at the S&P here. See what we've got going on in that S&P. So basically, gang, what we have right now in terms of the overall trend, one of the questions that I've been getting is if we are dealing with an uptrend, what did Wednesday's sell-off and Thursday's recovery, what does it actually mean to going forward? Now, remember, gang, it's a Friday, and I kind of have this joke we have in the room where I say traders hate Fridays hate traders. Fridays hate traders. And it's just a reminder, right? A little cute way to remind ourselves, what is it about the end of a week, even the end of a day, the end of a week, the end of a month, the end of a quarter, the end of the year? Why is that psychology so different than the beginning of something? If you took my ultimate day trading class, you know that I focus my day trading on the first 2 hours of the day. And then at 11:30, boom, there's my cutoff. That's what that entire class, that's what my entire day trading is built upon. Well, when you get to Friday, there's a couple of things that, that will give you some insight into why Friday might hate traders. I've been a Forex trader for 20 plus years now, late 1999. And one of the things you realize on a Friday when you're Forex trading is just how much the turnover, the liquidity contracts after Europe closes. And that psychology does permeate the indices. It does permeate the equity market. So keep that in mind, right? Be very cautious on Fridays. We want to be cautious anyway, but be especially cautious on Fridays. And so today, this Friday, one of the things that I mentioned in the premium video that I send out to members was, hey, we're probably going to see another contracting day. So a lot of folks started to what? They started to FOMO the buy. Oh my gosh, I should have bought Wednesday. I missed my opportunity. And I said, no, hold on. We didn't miss anything. It's a Friday. It's at the end of the month. There's a likelihood for the redemptions to intensify the last 3 days of the month. We're probably going to get a second chance to build that swing position. So I hope that gives you a good idea of sort of where my head's at, where my analysis is at as we wrap up this week. All right, so let's get to it. Got a couple questions here. Coffee time. Absolutely, Dylan. Absolutely. Yep. Got the, today we're rocking some Jamaican Blue Mountain Peaberry. I think I made it a little strong, but I guess I need a little strong coffee today. All right, so love the name, Living Mindfully. Could you please take a look at ABNB? Sure. All right, so when we have a brand new stock, right, there's a psychology that's different, Shaley, and that is when you've got a stock that's brand new, there's only two things that actually truly matter. One is the sort of what I call the born on date, right? Which we know as the IPO date. Okay, so we have that. And then the other is going to be two other times to be aware of, because there's not a lot of technical analysis here to work with. I would anchor a VWAP to the IPO date and keep an eye on where we are in relation to that volume weighted average price. And then I would keep an eye on what the date is for the end of the quiet period and what the date is for the end of the holding. And that's how IPO games are played. As long as they're staying above the VWAP, the anchored VWAP, or if we test the wave, on the way up, get a read technically on it. And then after that, that's what I do with something like ABNB. Now remember, it's not uncommon to see the quiet period boost the market up, and then the holding period to give us the correction that many of us are looking for to the VWAP. So that's a simple general way to look at sort of new stocks, right? Whether it be Airbnb or whether it be, any IPO. All right, Riot. Hey there, Harry. Do I see Riot as a good proxy to Bitcoin? It has been, as has been Square. My country doesn't allow Bitcoin trading anymore. Hey, I'll tell you what, this country doesn't allow GameStop trading anymore, really. So it happens. Crazy times. Riot. Yeah, I think that you got a good, I think a lot of people use that, or they'll use Square, or they'll use something like GBTC. But I think you probably got as good a place as any to look at the sympathetic movement between one of those three, right? Square has been taken a little bit more on the chin. So I think you're in a good spot in that regard. Yeah. So, and there still are Bitcoin futures for those of you in the States that want to look at Bitcoin futures. I do believe we still have a Bitcoin futures contract. All right, moving on to SWKS. Hey there, Adam. SWKS. All right, so as we take a look at Skyworks structure, what I'm looking at, by the way, is going to be two things. One, always know where your stock is, right? Where your stock is within the larger index and within the larger sector ETF universe, right? Look at where that stock is, involved within those two. After that, we can get on to, straight up structure. And straight up structure says, while this thing, clearly you can see it can get very volatile from time to time. For the most part, it is grinding higher. I really would have liked a cleaner overall uptrend, but it's hard to want to bet against this. And you can see the last few pullbacks into the 34 EMA wave have been pretty good. So, I'll look at a little bit of volume profile here. My focus on volume is not the chronology, right? The volume that sits down in here based on time. I'm really not interested in time-based volume. I'm interested in price-based volume. And so there might be some interesting levels we're seeing there based on that, something called volume profile, something that's a big part of how I analyze which levels have participation, have commitment, have that conviction. So thanks for the question. How did I manage the surge? Oh, gosh. So Neil, I'll tell you what, let's jump back and take a look at our XRT. XRT is an interesting ETF, and straight up, it's not one that I trade very often because it does not have what's known as high concentration weighting. So I'm not a big fan of trading non-high concentration weighted stocks or ETFs because it's hard to pinpoint the stock that's going to move that ETF. However, XRT has probably in an inordinate way benefited not just from GME, Neil. It's benefited from this. It's benefited from a number of names that have taken off that are weighted heavily within XRT. So once a market goes parabolic, and that degree is the spacing, if you will, between my wave and current price action. That's the way I gauge when a market's gone parabolic, when it started to really accelerate, and when we can then have the green light to focus on breakout buys on high volume confirmation, or breakout buys through high volume levels, volume profile levels, and take those buys through the resistance, take buys through the ceilings that are put in. Other than that, things like 8 exponential moving averages become very, very relevant. As you can see here, those red dots represent the 8 EMA on my chart. So a lot of things change when a market goes exponential, as we've seen lately. All right, thank you for the question. Ryan, thoughts on SLV and the recent rise in stocks like AG? Silver has been, I'm going to be straight up again, because silver's frustrating to me. Silver's one of those names that, generally speaking, I like to play in times like this. You might say, well, Rag, well, yeah, who doesn't want to buy silver at a low? But what silver did at that point in time in March was, if you pull it back to a weekly time frame, it was basically sitting at historical lows. It was from about the point of $13 on. So when I hit a historical low in silver, and I've been doing this for the entirety of my career, it's a trade that needs patience. You might end up rolling in and out of SLV options for sometimes weeks, if not months, and you're just waiting for when it's going to move higher. And that's silver to me. Silver is one of those names that once it goes crazy, it can be really tricky. It will actually entice a lot of traders to jump in, and I mean, literal fortunes are made in these kinds of moves, and then hearts are quite figuratively and literally broken in that. And I've seen it so many times in my career. So I engage silver very prudently. And so what's the thing that I'm looking at here? Well, we're back to the daily time frame on silver. And what I would like to do, and this is what I do, and we're doing it on crude oil right now too, is I look for something, and I don't think I've ever introduced this concept before. We've talked about it in the chat rooms, but I basically have what I call a VWAP vice grip. Now, what does that mean other than the alliteration, which I'm an English major. I love alliteration. What is it that we do? I want to park a VWAP here. I want to park a VWAP here. What you're going to find is the VWAP sort of do something like this. And so once you've got those volume weighted average price levels, these aren't price only levels. These are volume and price levels. We know there's a certain insight into size, into the importance of breaking certain levels that are identified by a VWAP. And you'll notice it's like the VWAP is squeezing price. And if we can emerge from outside that VWAP vice grip, we will typically see that as a breakout. Having said that, I wouldn't engage SLV on the up move. Let's just see if it either finds a range or we retest the bottom of the range. And that's really where the bottom of the range is really where you want to engage silver. Now, all my cards on the table, I was long silver. We took a long in silver up in here, got stopped out, and then we started to build a long in silver in this area after we saw the Darvis levels form, and we could take advantage of that move to the upside. In fact, it's funny you mentioned this, Ryan. Just a few members in the room yesterday were talking about, hey, silver took a minute, but it was worth the wait. And if you have enough time to expiration on your options, you can take advantage of moves like that. So thank you for the question. And silver is going to be something I'm sure we'll be talking about more and looking at. Not to mention, I'm going to be looking more at the potential stocks that will be moving with silver as well. We'll talk more about that. All right, Texas Instruments, TXN. Hey there, Jimmy. So if we look at TXN, I can type it in, right? TXN is a heavily weighted stock, not a super heavily weighted stock, but it's a heavily weighted stock within the SMH ETF, which has been an absolute monster relative outperformer for months now, for 2-3 quarters now. So what I like to do here is I like to put, in this case, let me refresh this here real quick. What I like to do is add here we go. Add the ETF of the stock. And why is this not cooperating? Anyways, what I like to do is add the ETF of the stock so I can track its structure. So in this case, I would put SMH down here. And then, of course, whatever symbol is here will be here. So let me put this back onto TXN. So I want to track the stock and I want to track the sector. That's a really, really important point. I want to track the stock and I want to track the sector. So having said that, TXN may not be my favorite name to focus on in the SMH. Now, do I want to buy it overall? I sure do. And so I think a lot of our levels are going to come from these Darvis box levels. And that's really your zone. There was a Darvis box here. There's a Darvis box here. You can see the Darvis here. That's your oversold support zone, which AKA is your buy zone. And that's the way I would look at TXN. But also, we got to talk about this reality. And I don't want to be, so a lot of you have heard me talk about in the rooms, and I think we might actually have an episode on the Countdown Trader on this. And if not, we definitely will. And if you haven't checked out the newsletter that I have, it's Countdown Trader. Always makes me think of the Final Countdown. You guys remember that song? Do-do-do-do. Yeah, so check that out. That would be a great newsletter topic. So, Jimmy, thanks. We'll definitely, if we don't already have one, I'll talk to my and we'll figure out to put, because really what we're talking, I get really giddy about earnings because it's not about this at all. This is actually the countdown in many ways. I want to be out by this. We did the same thing in Starbucks, so we want to start looking at setups for a late January earning really in mid-December and take advantage of this, right? And then be flat. So I hope that gives you something to think about. I hope that gives you a different, maybe a timeline than one you're using right now when it comes to earnings, which earnings tend to have a very myopic approach, which there's nothing wrong with that proximity, but you got to keep in mind the IV crush. You got to keep in mind the volatility, and you may not want to sit through that. I don't like to sit through that. So I think about the time preceding that date, and if I've got a good, well-structured stock, ideally within a really nicely structured ETF sector. So thank you for the question. A lot of meat on that bone there in terms of the takeaway of, hey, just follow the trend, but let's really be vigilant about that countdown into earnings. All right. So next up is what does this mean for? So you know what? Actually, I'll give you a sneak peek of something that I was sharing with our members, and this is the first line of the daily notes that I send out to members. And in the premium video, I discussed the likelihood, especially going into Friday, that the Thursday rally could lead to yet another inside day, and it looks to be the case early this session. And I wanted to remind traders, and we did this yesterday too, we didn't chase the move higher. We day traded it, right? We had a lone NASDAQ day trade that we took from the early part of the morning. And that could be a QQQ day trade. That could be a XLY. That could be an XLK. Whatever part of the NAS you want to hang your hat on. I just went with the NASDAQ futures. That was the way we set that up in the futures room. But what I wanted to really caution everybody from is thinking that, oh my gosh, Wednesday was the opportunity and we've missed it and we got to chase this. And I thought, no, gang, and this is what I was mentioning. And thank you for the question. Yeah, we're going to have another shot. If you're still looking at a potential long position, yeah. And by the way, look at the structure. We have some volatility, no doubt, but look at the structure. And by the way, the volatility for the month of January, which is still what we're dealing with, tends to seasonally be a tricky one mid to late month, because we tend to have that window undressing. We tend to have the rally, the Santa rally in the month of December, and the window undressing that unravels sometimes in the latter part of the month. And also what's on top of that is the fact that the last 3 to 8 days, there was an interesting white paper for those of you market geeks out there who want to check it out. It's called Dash for Cash, but I'll give you the Cliff Notes version. Last 3 to 8 days of most months tend to see the redemptions. And then especially within the context of uptrends, which I still believe we are in, you tend to see that a lot of that money go back into the market the first 3 days of the next month. So yeah, I think this is setting up really nicely for an opportunity. If we're selective and we're looking for relative outperformers, which is really the crux of my watch list building, I think we have some terrific opportunities for the long side of the market going into February. Pretty stoked about that. All right, let's tackle a few more questions here. Again, it is Friday, so in about one more minute, I know a lot of you in the Simpler community are going to head over to your respective rooms, whether that be any one of our masteries, whether that be the options room, the futures room, etc. So, clearly I just want to give you guys a heads up. 9:20 is just around the bend. And then those of you that are not part of our community, consider taking a trial in one of our services and check out what we do. I'll hang out a little bit longer. It's Friday. I'll hang out a little bit longer and I'll take some Q&A, but just a heads up to our members, rooms will be open in just a minute for the start of the session. All right, what about Microsoft? All right, so I do like Microsoft. It's coming into its own after earnings, blowout quarter. A pullback is what's going to be necessary. I'm not going to buy, this area up in here. I'm just not going to chase it up here. I don't believe that Well, so let me put it this way. Could we play volume confirmed breakouts? Because, I mean, this market clearly has gone parabolic. That's my wave. The distance has to be a certain part of what I use is a daily price movement range to determine when a market is freshly accelerated, freshly parabolic. So yeah, we might be able to see some breakout opportunities, but I would be very cautious. Even if we can wait a couple sessions and maybe get some 8 exponential moving average action and just even a shallow correction, I think would be prudent. Okay. So thank you for the question about Microsoft. Really appreciate it. What's my idea on the 6E? Futures question. Love it. So by the way, as I go into some currencies, remember that when it comes to the current currency environment, we've had some very nice swing trades, trend following, overnight, daily time frame entries. Trend following is the emphasis. That's why the 6E for me doesn't cut it anymore, James. So, look, all my cards on the table. We have 5 actual symbols we're looking at. The euro, right, which would be your 6E. The pound, that would be your 6B. We have the Canadian dollar, that's your 6C. I'm interested in the Australian dollar, that's a 6A. And then finally the New Zealand dollar, that's your 6N. So these are the 5 ways that I want to look at shorting US dollar. Now, I'm not going to go short the dollar. I'm going to go buy the currencies that are stronger against it. So you might say, well, Rog, euro's on there. But of all of these, the euro's the one that's moving sideways. So this is going to be a really good candidate for a VWAP vice grip, right? I'm going to drop. Now, we've been using VWAPs in the room for a really long time. I did a class back in 2018, 19, I can't remember anymore, called Submarket Sonar. The sonar is the volume, not price. Most traders, and the edge you have, by the way, when you look at volume, is the edge you have when you are looking at not just price, but how much size is happening at that level. So yeah, I think a VWAP vice grip, especially when we start getting and I'm going to drop this. I have no idea what this looks like. I'm just mocking it out because it's usually what it does. Once we start to get the blue grab candles, you're typically going to see the VWAPs converge. When you drop a VWAP from the swing high or a swing low, you'll start to see those VWAPs converge to that compression, that squeeze of between the 2 VWAPs. And we'll do what I kind of alluded to before. I'm doing this in crude, looking at this. You can certainly look at this in the euro. Silver was a good candidate for where the VWAPs, were indicating where the compression was happening. But you use those volume levels, those volume prioritized levels to determine, is price alone a tripwire? It can be, but price and volume, that is definitely something that supercharges the entire situation. So that's something to think about. So I hope that makes sense. And I would tell you, my friend, what oftentimes happens is I'll say, hey, I love that you're thinking about currencies. Take a look at the 6C. Take a look at the 6B, right? Because if you're playing 6E, clearly you're fluent and fluid enough where you're looking at markets that a lot of people don't. And by the way, if you're thinking, Rog, I don't trade futures, no worries. FXE, FXB, FXC. These are all viable alternatives. They're currency share ETFs, and they are markets that you can use in lieu of the futures contract. Now, I can get really crazy and start talking about Forex, but I won't do that to you guys. But I know a lot of you out there probably are Forex traders, and you say, yeah, Rog, I'm all over this, right? We're playing Euro US, Pound US, Dollar Canada, Aussie US. So keep in mind some of those. 6A really might get, and 6C, Steve, yep, those could be really, really good to keep an eye on. All right. So moving on. And where do I like to anchor my VWAPs? Typically, I like to anchor them on what I call minor high or minor low max patterns. They're typically going to be some sort of swing high or swing low, high volume days, earnings. We talked earlier about IPOs. Yeah, so a little bit of that is a process. It's not subjective. You want to have 5 or 6 different categories of what would be a confirmed level. But yeah, certainly you could do that. Certainly you could do that. All right. Let's see. Hey there, Alex. If we could all discipline ourselves to buy calls on double green pullbacks at or below the wave, 95% of our profit. Alex, thank you for basically giving everyone the Cliff Notes version of my life. I love it. My book of Raghee as a trader would basically be a paragraph, and that would be it. But also in that paragraph would be pay attention to your calendar time, pay attention to volatility, HPMRs. You know, when the HPMRs go berserk, as they have a couple times this week, I'm always going to caution traders to ease up on activity, because volume reminds us that, you know, we can get very, very easily coaxed into over trading some. So, you know, volatility is going to be, so time, volatility, volume, and then price. So yeah, there it is. And thanks, Alex. That's my bread and butter right there, gang. I'm not really holding anything back. I've been making my approach and my tools transparent and free, like the wave and the grab, since I've been trading and sort of publicly sharing my analysis for, I don't know, what's it been, about 20 plus years now. So thanks for the chuckle. TXN, another stock with an exceptional support at the 50 moving average. Chris, I love it. 50s, 200s, those are definitely moving averages that transcend, especially that 200, that transcend technical analysis and really become psychological levels that even people who don't consider themselves to be chartists or technicians will keep an eye on. Absolutely. Absolutely. I love it. All right. So the bell's going to ring here in about 3 minutes. Like I said, 20 after, by the way, gang, for those of you that are not members to any of our simpler rooms, at 20 after, our futures room and our options room goes live. Our moderators, our traders are in the room, and they're walking you through the morning. So I'm going to head on over to the futures room. That's where I hang my hat. That's where I'll be here in just a few minutes for my day job. All right. But I figure we do a little extra Q&A, so I hope it's been helpful. All right. So let's see, what do we have here? Freeport-McMoRan, you know, is a great stock. I opened the office windows today, letting in some gorgeous South Florida winter fresh air. And of course, sorry about the dog barking, some random dogs clearly upset about something. This mic picks up everything, doesn't it? Anyway, I love Freeport-McMoRan. We actually have a long position in it. Our lower end of the range was sitting at, I'll have to double check what I ended up. But I will typically warn traders about getting in. I will typically warn traders about getting in around earnings, as long as you're aware. Like I said, the calendar is a big part of what we do. So as long as you're aware of this, and you're willing to take the uncertainty, and you've calibrated your risk tolerance to the unknown of the volatility around earnings, I think Freeport-McMoRan is a fine entry, especially if you're playing the option side of it. And by the way, I think those of you that have been following me for a while, Freeport-McMoRan is really a copper play for me. Janik, yeah, it's really a copper play for me. I'm not playing gold right now. I think the read on real yields is difficult at best. So I'm really not playing gold right now. That barking is making me crazy. All right, there we go. So quiet that down a little bit. So what else do we have here? Yes. Oh, there's a number. So for those of you that are in my Sector Secrets Mastery, I see a lot of questions about Starbucks and Nike. Yeah, we're going to talk about those. Consumer discretionary has been taking it on the chin, and Nike has absolutely been, you know, blasted over this week. Starbucks has been having a difficult time too, and I can only say Starbucks is going to be, you know, part of the earnings narrative, but I can only say probably this. These are two stocks that were likely part of the end of year padding of many portfolios because they were fantastic relative outperformers within the consumer discretionary sector, within that XLY. And I've only got to imagine that some of this, not all of it, but some of this is a little bit of the unwind, in terms of window dressing to a little bit of window undressing. Okay. All right, gang, it's 9:30, time to get to work. Thanks as always for joining me for Charts and Coffee. Have a terrific weekend. I will see you all either in one of our rooms or I'll see you on Monday. Be good to each other, gang. Thanks for being a part of the Charts and Coffee crew.